Dual-listed Capital Shopping Centres is a UK-based real estate investment trust largely focused on shopping centre management and development. The company declared an interim dividend of 5 pence per ordinary share that will be paid to shareholders on the 22nd of November 2011 at the rate of £12.33 to the pound.
Market capitalisation of just under 35 billion rand, price earnings of 17.5, dividend yield of 3.7. Travis, the attraction here, I suppose, and there's a good side and a bad side. The attraction is we're seeing currency weakness, and that's pushed the price up as the rand is weakening against sterling. Folks have said, hey, that dividend just became a little more chunky, the earnings became a little bit juicy. The flip side is that I wouldn't want to be a business person in the UK right now. I mean, you think it's tough in South Africa. In the UK, it's better than Greece, but it's a tough environment.
Yeah, I mean, going back to the rand, I mean, you've got probably two businesses on the JSE top 40 or top 100 that do no business in South Africa, and that's Richmond and this one. So from an investor's point of view, if you're looking for rand exposure offshore without taking your cash, well, this is your play.
Nice and easy. Nice and easy,
simple as it is, but it's not that simple. You know, there's a lot of things with property, and you know, it comes a lot of risk involved, and like you say, with economic conditions looming and concerns over Europe as a whole, it could be a bit of a danger with
and they're getting austerity measures as much as anybody else, increased tax, reduced, etc. Quality assets. And you've got to say, in boom times, these guys are going to print cash. And they're doing all right in tough times, but it is just those tough times.
I mean, I've seen they've got like the top 10 locations in terms of malls out of the top 30. This offers them as a business and to get more clientele through the doors, but offers them also negotiation powers against the people that they're leasing, you know, renting these things to. I know they've done some acquisitions in January. They looked at a major acquisition in Manchester. They're also looking at further acquisitions or further spending to increase their stores or you know, the makeovers. I think 500 million pounds was the numbers. So that they've got the money. You know, they're putting it into the shopping, but you've got to ask yourself, in economic conditions, is this the stock to have?
Let's bring in one at the wall to give us a technical picture now of the stock. How is Capital Shopping Centres looking?
To me, it's looking weak. We've had a short-term failed breakout. The stock broke resistance, failed to hold it. Along with that, we had some negative divergence on a stochastic. It was standard 14-period stochastic there. So all in all, looking weak to me.
You mean, I mean, obviously, I think the breakout was just in the last couple of days, and that was on the rand sterling exchange rate pulled back. Are we likely to head all the way back to that sort of 36, 37 level? Would that be the target?
I would be maybe not that deep. The first level would be around 38.30 rand. If it breaks through that, then I'd start looking for the actual horizontal support levels. At around 37 and then 36.50.
Your bearish divergence, you've got stochastic not confirming the high. That's what you're talking about.
That's it, yes. And of course, it breaks the trend line and then gives us negative divergence on a stochastic, which is pretty bearish in itself.
And then comes back down.
And then breaks back into the trend line.
You've got to say, since about, I mean, I was looking at the charts today, since about June 2010, this thing's been trading in a channel, and we've seen the channel from 45 to 36, and you know, it's in the middle of, like you said, it's broken back down.
And that's a trend we're seeing across, well, actually, some of them are closer to the bottom of the channel, but our market hasn't done very much in the last little bit. We had a bit of a rally in the industrials late last year, but then broadly, we haven't done a heck of a lot at all.
Yeah, exactly. So, you know, you probably want to wait until it gets to the bottom of the channel to see if there's an opportunity to pick it up, which will be about 36.
What's your take on the company looking to go the route of a scrip dividend alternative instead? Are they not concerned about the dilutionary effects of that move?
I'm not too sure, you know, what the take is, and it's, you know, I haven't looked into that. Maybe it's just a way of putting different measures in place in the practice of the business. But you know, I'm not too sure what the intent is from the business in terms of scrip lending. And
how do you feel about the stock overall, hot or not?
You know, I like the group that it owns some top retail space in the UK. I like the fact that it offers you exposure offshore. My concern is, at this present time, I'm a bit concerned where the economy is going, and it wouldn't be a stock that I would invest my money in right now. If the times are to change and the markets are to change, this is one of the largest UK listed real estate chains. So it's got, you know, and they are prepared to put, like I said, 500 million pounds into it and look at improving it. So they're not just sitting on the laurels, the market's coming off, they're looking to grow. So in time, it could be a stock to watch. I've got a lot of clients who do like it, but they do like it off lower levels. And I think the bottom of the channel would be something that I'd be interested about. 30, 37, 36. As Warren was saying, we get to the bottom of a channel there. I'd be looking at it. Right now, not good for me.
Not so hot, Travis. How about you, Warren? How do you feel about capital shopping centres?
Not hot at the moment. Once again, 36.50 would be the area to look at it.
Simon Brown, we've had two not hot. SocGen came out with a report that they are downgrading the UK real estate, and there's concerns obviously around the sovereign debt, there's concerns around liquidity pressures. How do you feel about it?
And they're downgrading everything in the UK. It's a brilliant company, but it's in a tough space. I think the rand is probably going to strengthen a bit against sterling to take some of that gloss off, and the UK is a tough place. They're going to get modest growth, if any. They've got the austerity measures. They're not Greece. We accept that 100%. But these days, being not Greece doesn't mean it's a complete free ride. So great company, but at this point, would I be a buyer? Nope, not hot. Wait for better times.
Not hot for Simon Brown. Well, despite that downgrade by SocGen, they still said that it was a pretty impressive company, one of their preferred stocks. Let's move on to Travis's stock pick. What have you chosen for us today?
I'm taking a bit of a risk here, looking at FirstRand. I know in the news we have seen Zambian president, we discussed earlier, he did scrap their deal. Like I say,
it was a tiny deal for him.
It was a tiny deal. He did fire the whole central bank. And I like FirstRand. I like their growth into Africa. They're just looking at a partnership with, I think, a Chinese construction bank, and looking to expand into Africa and to build into African presence. Also, with that Chinese group, they're looking to expand into India. There's big news on the special dividend that's been announced.
Yeah.
So 70 cents per share, plus they're offering a normal dividend. So I think you're getting about 46. So you're looking at 116, which is last trade date on Friday. I think this little Zambian thing has offered opportunity for the stock to come down to 1950, where it was around today. And this is where the levels I'll be picking it up. I'm not looking for to shoot the lights out. I'm looking for a move back to 21. Nice, good return on a short-term trade. But then again, having opportunity to pick up a nice, attractive dividend, and that special dividend as well. So from that side, it's a short-term trade, and it's attractive.
Fantastic. Thank you, Travis. The stock pick is FirstRand. Warren, you have chosen the top 40 index, but it's been on a downward trend. What is making it so hot for you?
I think it would be hot on the short side. Look, the SA40's obviously been coming off since March. We're topped out at 30,150 points roughly. It had a big correction, around 20%, finding support at 23,933. That was probably the place to have a short-term long. Since then, sort of end of August through September, we've had this channel forming. I wouldn't quite call it a flag. It doesn't quite suit, but it is a channel. That channel broke a couple of days ago, and we've had red candles ever since. On the intraday charts on the hourly, it did come back and find some resistance there, which confirmed the breakout. So my idea is that this is going to move down to around 24,000, 23,930.
And at what point would you buy?
I would be looking at it around there.
Okay. Simon, give us your quick 10-second take on FirstRand and the top 40 index.
FirstRand's never been my bank of choice in South Africa, the big four, but they're innovating. I'm not just talking the ad campaign, they're innovating. They've got great management, Michael Jordan heading it up. I'm fast starting to think that of the big four, FirstRand is the one. I like it. I think it's great. Travis is talking short term, I think even potentially long term. A big market, short answer, it is looking nasty. Top 40 is looking nasty. We're going lower. For the long-term investor, don't panic. For the short-term guys, be short.